Good morning, traders. It is Monday, December 16th. We are 90 minutes into the open. Let's see what the market's doing. I'm sorry about that last video, having a problem with my headset and recording. That's been resolved, so let's take our time and see what we've got going here. Market is pushing higher. Got a nice gap up. If it pulls back and takes out this low, we're likely to find support right here at the prior high, which was from Friday. I'm not buying into this rally because there's not a lot of new news today. Just floating higher on momentum. I expect the market to pull back. I don't know that it will take out the low, but we need this dip in order to buy some of the stocks that I found. Very easy using Option Stalker. Probably took me, 5 minutes to find these stocks this morning. So I'm going to knock through that list of my favorite searches. Heavy buying. Boy, a lot of candidates now. There weren't too many candidates right on the open, so in the first 10-15 minutes I was able to really zoom in on this. But now you can see there are a lot of stocks with heavy volume that are through the prior day high and have very strong option liquidity. So if I were using Option Stalker, I'd be using additional filters, looking for a buy signal on an M5 basis, looking for maybe a buy signal on M15, looking for relative strength on M5 or M15. So that's the process that I'd be going through. SQ, that's interesting. Oh yeah, nice. Got some nice long green bars closing on their high. We're through this little downtrend right here. I'm going to take this 10P indicator off. Before I do that, let's go into SPY. I use it to trade the S&P 500. Let's see if we've got a day trade setting up. We had this bearish cross right here. It is signaling that we're going to get a little bit of a pullback right in here. So you've got one inverted hammer here, bearish hammer. Stock or SPY tries to get back to that high. We're drifting a little bit off of it. If I were going to trade the bearish side of the market, I would use only half of the position allocation that I would for any longs. You really have to be focused on the long side right now. Market wants to go higher. Any pullback is a buying opportunity. For most of you, I would say pullbacks. Simply line up your long stocks. See how the stock performs. We want stocks that are holding up when the market is pulling back. That tells us that when the market finds support and it starts to go higher, these are the stocks that are going to lead the charge. They want to go higher. So that's how you can play pullbacks. Do nothing. Wait. Let the market come in. Evaluate that stock. As soon as the market finds support, then you buy the stock. Market rebounds. It'll fly. So some of you may like to trade on the bearish side. You have to be very careful right now because the market is continuing to move higher. I'm looking for it to have little gaps up like this every day, and then it'll go sideways. Check the bid. You have the bids there. Then the volume and the trading range will collapse. We're almost in pre-holiday mode right now, so can't do a whole lot of day trading right now. You have to have stocks with heavy volume and good momentum on the upside. Apart from that, you want to be selling out of the money bullish put spreads, and you want to be doing it on stocks that have a nice little bit of momentum, and that momentum has pushed them through a major technical resistance area, and now that technical resistance has become support, and you can sell your bullish put spreads below it on the notion that the stock is going to continue to push higher now that it's broken through that resistance. Very high probability trading environment for that type of setup. And every day you'll see a little bit of a gradual move higher. Brexit looks great. Got a trade truce with China. We've got USMCA probably going to happen. The Fed's going to remain accommodative through 2020. They said that in the FOMC statement. So stocks need time to grow into their valuations. That doesn't mean we're going to see a big pullback. It does mean that if you get a big spike up in a melt up type situation in the market, that's going to attract profit taking. So you have to be a little weary on those types of moves. So let's see what we've got today that we like. So heavy buying's one search I love. Love relative strength 30. That's really good. Oh, Roku is making a really nice move. That was a bearish pick of mine this morning that I was watching. Didn't trade it, but was watching it because it dipped below the 200-day moving average. Take that 10P indicator off. Put up that SMA. There's your 200. There's your 100. Dip below that 100-day moving average. Now we have a bullish hammer on it, and look at the stock. Oh yeah, grinding higher. broken that downward trend line on an M5 basis. Let's take a look at M30. Still nothing too significant there. To have an overnight position in it, I would want to see Roku break above that downward sloping trend line on a 30-minute basis. That puts us at about 141 on it. So watch that 141 level, and then you can start looking at selling out of the money bullish put spreads using that 200-day moving average if the stock gets above 141. And there you can see that 100-day moving average. That's what we want to lean on. You should be able to get some really decent premiums out of that. So without further ado, because I am actually running behind, I'm having to re-record this. Apple was a stock that I liked. You can see how it was able to finally get some escape velocity after breaking out to a new all-time high. 2 green candles closing on their high. I like it for day trading more than I do for selling out of the money bullish put spreads. Getting a little bit hot for me up here. Next stock, WDC. You know this because I highlighted it last week in my swing trading video. This stock is a little hot also. I do like it for day trading from the long side. And here's how you approach it. You start drawing downward sloping trend lines down here using the alert. And I just got an alert to the upside that that downtrend has been broken. Stock still needs to test this support. You can day trade this one from the upside, but wait for the market to come in. Let the stock show you that it's got relative strength. How do we do that? Put that 1 OSI indicator up, and you can see how it's weak relative to the market here. You got to get that line above 0. That orange line goes above 0. I think you can start looking at it. Now, a little bit on day trading pullbacks. I don't like to see a lot of consecutive red candles closing on their low. What I'd rather see is on the way down, I'd like to see tails under body. So the stock dips, but the bar closes on its high or close to it. That tells me that on every little pullback, buyers are coming in. When you do finally get a bounce in it, you want to see those tails under body with green candles closing near their high. When you get that, then you know you've got the strength you need to blow through that high of the day. So that's just some technical analysis, a little bit of advice for you. DE, I like it because a U.S.-China trade deal is going to be good for DE. It's going to be good for farmers. China's going to be buying more U.S. crops. I think long-term that's good for DE. It is a choppy stock, as you can see. Really liked selling that bullish put spread on that 100-day moving average that I highlighted back in here. So now it's starting to get a little bit far from it, but if you get a dip in the stock, I do still like that. Adobe, ADBE, good earnings report last week. Similar to Apple in that it is really starting to get some momentum here. 2 bars closing on the high, that's bullish, and you're above this horizontal resistance level right here. I also like that. So for day trading, I like it on the long side. I'd be a buyer on pullbacks. And if we go into a 5-minute chart, we can see how the stock has come up, starting to level off. Really no relative strength here. You get a market dip and a pullback in the stock. That's when you want to start looking for those long tails under body. But I do like Adobe. I think it's got good chance to move higher. Intel. Here's how you play that. Come in, click alert, click that bar, click that bar. It was a little bit above that downward sloping trend line, so we're going to have to go a little bit shallower to get the line that I want. So we're going to use that bar and that bar. Now I've got my downward sloping trend line. I want to wait for the stock to break out to the upside. Then it's worth considering. Now here's a problem. You see this open right here. Okay, it's got to hold that level, but that open also coincides with the prior day's high. This is a support level that has to hold. Let's watch it. Let's see if it finds support here. Then you could possibly day trade it to the upside. Don't like a lot of red candles. Okay, we want green candles. We want bullish hammers. That's what we want all the way down, and then boom, gone. But I do like Intel for a bullish put spread. We were looking at this horizontal support level just a few days ago. We were selling bullish put spreads below that in the swing trading video. That is an excellent position, making money right now. Bullish put spreads are the way to go. Expect gaps higher, small gaps higher, that bid to be tested, and then a compression the rest of the day. If you weren't long overnight, you're going to have a really hard time making money in this market. CDW, really like that pattern today. Got this nice compression, and you have a breakout through horizontal resistance. Looks really good. I don't think the option liquidity is that good. Let's check. Stock ER, option liquidity -5. Can't trade options on this one. You'd have to buy the stock, but it could be a good day trading candidate for us. And it's pulling back right now. So I'm going to just put a little reminder for myself. I'm just going to click on the high of that bar and see if it pokes through. If it does, I might have an opportunity to get long. Grub, G-R-U-B. Oh yeah, I saw this one early. I do like this stock. Here's what I like about it. I like it getting through this horizontal resistance. Now it's in the gap right here. Got a lot of room to run. You can see relative strength on a daily basis. Looks nice. Okay, so watch Grub. I think this is a really good one to day trade on the upside. Check that option liquidity is 0, so might be able to get some option trades done. You could possibly sell a bullish put spread right here on that horizontal breakout using the 42.50 strike. That would probably work as well. PYPL. Let's go in and take a look at that one. Oh, I like this stock. Look, you got this breakout right here. Little cup and handle formation right here. You got a horizontal breakout. You're above the 200-day moving average. Relative strength starting to build in it. Oh, let's do an option trade. Right click, trade options. Whoops. Right click, trade options. Let's let that option chain load. And we're going to be using 2 standard deviations. Front month. Click on September 20. What's kind of nice is you can see here that the standard deviations are outlined for me. A 2 standard deviation is the blue line, 1 standard deviation is the red line. I really want to key off of this 107 level right in here. And let's see if we can do, I'm going to put up all strikes because I want to see what's below that 77 level. So in December 20 on PayPal, we got the 107 level is 26 bid, offered at 15. We can get 11 cents for that. I like it. And that's but that's a dollar spread. A little bit thin for me. May have to go a little bit farther out in time or a little closer to the money. I could go with the 108 strike. Let's see what we get there. We get 47 and 27. That's closer. Might be able to squeeze a little more out. I'll do 20 cents right now. I'm okay with that. So I click the bid. I'm going to be selling the 108 put. I'm going to be buying the 107 put. You can see the credit here, 20 cents bid, offered at 23. I'm going to click on the bid. It loads the price, move it up 1. I'll do 10 contracts, add that in, click submit. Order filled. So we got 21-cent credit for it, which on that spread, it's $1 wide. That means that there is $1 minus 21 cents. I have to put up 79 cents for that spread. I've got a chance to make 21 cents, roughly a 25% return on investment based on the margin put up and on the maximum risk for the trade. And I'm right around that 200-day moving average. I've got a really nice, solid day building right here. That stock looks like it's going to continue to move higher. So really like that. So when I said earlier the type of bullish put spreads that I'm looking for, I want some momentum. I want some breakout through a major technical resistance level, which I can now lean on. And the notion is that the stock will continue to push higher and distance itself from that breakout. So I'm okay with the 108 level because that was horizontal resistance. Now it's horizontal support. That 200-day moving average at 107 would have been nicer, but I'm okay with the 108 level and I'm getting a decent credit for it. So let's take a look at a couple cheapy stocks that I put up here too. BGCP. That was nice. We had a little bit of a breakout here, some long tails under body. It's only a $6 stock, but it was having some decent price action and some decent volume today. EZPW. That's been a really nice one. I like this. A lot of nice green candles closing on their high. And here we go through the 100-day moving average. Looks good. Let's zoom out and see what the longer term picture looks like. Oh yeah, lots of room to run. I like this one. That's a nice little stock to consider trading. XON, let's see what's up with that. Also, through major moving averages, through horizontal resistance, let's take a look at that M5. 5-minute chart. So we've got some long tails above body, long tails under body. This is a relatively choppy stock, so you have to buy pullbacks. You cannot chase this thing on a new breakout to a new high. Click there, click there. Got my downtrend. As soon as the stock is able to get above that downtrend, I know there's an opportunity to buy that stock for a day trade. So that's how we do it. Use Option Stalker. Lots of great tools and features. The searches are incredible. If you'd like to try it, I do have free trials available for the rest of the month. In fact, if you sign up now, I'll extend it through January. That'll give you plenty of time to try it. Unlimited stock and option trades are included in the price of Option Stalker. Go to www.oneoption.com to learn more about it. If you like this content, please give it a thumbs up in YouTube. The more thumbs up I get, the closer I know I am to nailing what you want to see. And subscribe to this YouTube channel. You never know when I'm going to be posting videos. They almost always have great trades in them. I don't even know when I'm going to be posting videos. Yesterday I was sitting home between football games and put up a really nice trade this morning. Let's take a quick look at that. CDW looks like it's gone above our trend line, so you get these pop-up alerts once you place that trend line. Let's take a look at how yesterday's trade did anyway. I posted MTCH as a nice bullish put spread. So here you can see the stock opened higher, pulled back. It was actually below the close on Friday, so given that credit that we were looking to get that I posted in the video, you should have been able to get that and maybe even better. And since then, boom, stock is rallying, nice shape. I like it. Look at the D1. Yes, above that 200-day moving average, getting through this horizontal resistance. I think that's a winner, folks. We'll see you tomorrow. Good luck.